Good morning, buddy. Good morning. Hope everybody's doing well. Chuck, we will look at MU after, and memories, FH5, FD. We'll talk about that at the end. Good morning, Will. At memories, you can also check out gameedge.us. We have extensive education on that. But the short answer is price does not go where options are not at. So speculation has to be at least out of the money calls higher. That would be anticipating that price is going to appreciate, or out of the money puts lower. Most market participants transact or speculate with out of the money options, usually 20 delta, somewhere around in there. So depending on what the structure looks like, that is how you can get an idea of where market participants are positioning and speculating. So that's the short, quick answer of that. So obviously you have significant amount of calls overhead, delta, positive delta, right? Out of the money calls. Then, most market participants are speculating higher. And there's also a dealer metric in there of hedging that has to occur as you move across those strikes. So that also can lead to price appreciation. So. All right. Welcome, everybody. Welcome. We'll get started in just a minute. Good morning, Butch Dad. Butch DSD. All right, let's go ahead and jump right into it. Thanks for everybody for joining us this morning. It's Michael coming to you from Game Edge on Wednesday, December 17th with our pre-market prep session. As always here at Game Edge, we'll cover those three pillars: sentiment, structure, and trend. And then we'll cover some individual equities, and I already have a couple questions here from people joining us. So if you have any other equities you want to cover via our web app, to look at the option structure, we'll do that at the end, and you can throw those in there. Or if you have any questions while I'm giving the presentation, be happy to try to answer those as we go along. So as always, we start with our trend, our market trend model based on the tick index. The white bolded line is your intraday instantaneous cumulative tick, or CT. And if you're a 0DT trader, that should be what you're following. Obviously, we had a significant weakness in the overall market and a pullback. As you see, the bolded white CT was from upper left to lower right, and there's a negative slope downtrending, indicating more selling versus buying in the overall market. Breadth indicator up here, obviously you see the new highs versus new lows. New highs were still outpacing new lows, but just barely. So breadth was not expanding to the upside the past few days on the overall pullback in the market. And then yesterday, we actually had new lows outpacing new highs. And then our filtered cumulative tick was below zero for multiple days. Again, this is indicating institutions are selling more than buying. Our railroad tracks, or our shorter term moving averages, are 1 to 3 day period for traders. If you're a swing trader, you want to see these obviously turning back to the upside in a positive slope. And then our longer look back period for longer term swing to longer term position traders is the red above the cyan. It's our colored ribbon. Our mechanical portfolios have been turned off since the CT or a bolded white line started cutting into the colored ribbon, and it still turns off today. So this is our gate or our trigger for our mechanical portfolios that are still off. So bulls would want to see this bolded white line start coming back above these shorter term moving averages, indicating that we're seeing some overall buying in the market, and then emerge outside the colored ribbon for us to change the overall direction of the market. All right, let's move on to our new trading view market trend model that was released the past few days. We've had great feedback from this model. This is on a 30-second time frame for SPX. You can drop it down to a 15-second time frame, but this is the price action from yesterday. And obviously you can see it was just a significant downtrend in the market as the market continued to pull back via price. And we did not see a change in the overall tick or a market trend model really into the afternoon, but then we got a quick move back to the upside that was already indicating that we could have a possible upside movement and reversal towards the end of the day. And our market trend model was already indicating that as we started crossing above the shorter term moving averages. So for us, we set alerts once we start crossing that this first moving average, then you can start to begin progressive exposure if you're a ZODT trader to the upside, obviously managing risk and looking at our other tools, which was our vol M command, indicating that the put speculation to the downside was actually starting to abate into this time frame here. And then we actually started seeing the call slope or the call centroid pulled to the upside, indicating there was out of the money call speculation. So when you match our market trend model with our intraday tools as well as our key levels, we had pegged 6760, 6750 yesterday, most likely as an opportunity for a bounce. That was our expected move, as well as our lower key gamma delta levels that we were looking at. You had a great opportunity early in the day to be short and then look for the reversal towards the end of the day. So again, we get extensive feedback about this trading view tick that is now available. So come join us in the Discord. All of the scripts are in there and you can add this to your trading view chart. All right, moving on, the SPX options complex is the largest and most notional value. We separate the SPXA from the SPXP. SPXA is obviously the monthly expiries. This is institutional positioning. These are what we call our tankers that steer the overall direction of the market from a longer term time frame and a 40,000 foot view. We're still call dominated, so structure is supportive on any pullback. That really hasn't changed, and we continue to stick to that thesis. You'll notice the transition is extremely wide. Yesterday, we actually dropped below the transition and then recovered it. And then now we're looking to push probably towards the top of transition of the gamma transition. And then the delta transition is up towards 68.70. So if within this overall structure, we're still choppy price action on the SPXA as the institutional look. If we get above the transition as well as 68.70, we look for 6,900 to the upside. So again, still supportive via institutions, not much change in positioning there for heading into the monthly expiry. All right, moving on the SPXP. Again, these are our speedboats. These contracts turn over via weekly or ZODT daily. So you can see here via our web app. Our transition area is extremely wide here also, 67.95 to 68.40 to the upside. Again, we dropped below that yesterday. We came almost down to the PGEX level, where historically that's an area where we can look for some monetization, or sorry, INGEX level, and look for possible supportive type action. And then we dropped or we ran back up towards 6,800 and actually finished within the transition, which actually is a little bit bullish. And we dropped below the COTMP there. So we are call dominated. So again, the structure should be supportive via all expiries. And then for the upside, if we get above transition here, we're looking for 68.50, and then above 68.50, obviously we'll be looking up towards the quarter level at 75 and then 6,900. So again, SPXP call dominated. Should be supportive on any pullbacks. All right, moving on to the SPXP GEX ratio. Yesterday with our overall move to the downside and then recovery, we've actually saw the GEX ratio pop back above 1. So 1 historically is a balance point between calls and puts. And if we're above 1, we give the edge to the bulls. This just is indicating that short dated call gamma is larger than short dated put gamma. So obviously that would be the short out of the money call speculation winning the battle. So we want to see this continue to improve with a positive slope to the upside if SPXP is appreciating to the upside. That lets us know that market participants are speculating with out of the money calls, and the out of the money call gamma or short dated call gamma is increasing and overriding the short dated put gamma, which is also bullish. All right, moving on, the SPXP delta balance. Let me zoom this in a little bit. All of our charts here at Gamma Edge are interactive, so you can zoom in and look at the individual strikes. So heading into today, we've seen an improvement in the overall structure here. We'll talk about this. We separate the structure from the left-hand plane, which is below spot price. That's your red dotted line. And the right-hand plane, which is above spot price. That would be your out-of-the-money call speculation as well as in-the-money puts. Left-hand plane below spot price is your in-the-money calls. As we said, those will continue to be supportive. And those are your out-of-the-money puts as well, which is your speculation to the downside. So the zero line is that theoretical balance point. We like to see it above there if you're a bull, below there if you're a bear. And we've seen the right-hand plane start to approach the zero line, still just barely below it. So this would need to move above, and then indicating that out of the money call speculation is coming into the overall structure and complex. And then the left-hand plane continues to improve here. So these are in the money calls that are fairly entrenched below us that will continue to be supportive. And that is pulling the delta balance up towards the upside. We're not completely up towards the +1 level yet, which would indicate a full bullish or call dominated structure with the left-hand plane and right-hand plane. But the left-hand plane is pulling us up enough to be in a call dominated overall structure. Now, key takeaway here is we see this run back up towards the 1 level. We see the 18th, we see a slight drop in weakness here, and then we see it run back up, but then we see overall weakness heading after the monthly OPEX, which is the 19th. So again, this could be extremely choppy price action within the overall structure, as market participants are really just not, they're very cautionary. Not full bull, not full bear. We're basically just chopping back and forth with the overall market participants and positioning. So we'll continue to watch this day over day. Slight improvement in the overall structure. So that gives us the thesis that we could run up towards 68.50. Definitely repair or improved from the previous 2 days when we saw our pullback in the overall structure and market. All right, moving on, the SPXP net stack command. This gives us our highest sensitivity levels for today. Again, as we just discussed, in the money calls below us at 6,800. Those are fairly entrenched. Those will be supportive on any pullback. And then we have a weak in the money puts above us. So again, this can be easily flipped to out of the money calls and override the level if we take the 68.50 level. So let's go on the charm structure and line here. Again, out of the money calls at 68.50. Fairly larger than the left-hand plane. So again, this will continue to be a headwind if we're below 68.50 as the options continue to decay throughout the day. This charm overhead headwind will continue to grow, and you'll see that in our web app. Below us, 67.75. These are out of the money puts. So these will continue to decay, and these will be supportive on any pullback. Even down towards 6,800, those will still provide supportive type action. Gamma, get across 68.50. Again, this can give you some overall fuel to the fire and have an opportunity to move higher. And then as long as we're above 68.15, we're not seeing a significant move to the downside. I would push this really towards 6,800, 68.15. And then Vanna, again, the right-hand plane is significantly larger than the left-hand plane. So if we do see a drop in volatility, we have VIX expiration today. And then we also see out of the money calls come in. We have to have those two components for a Vanna rally. Out of the money calls and a drop in volatility or a drop in VIX. And that would be a move up towards 68.50. And if we cross 68.50, then we'll have a Vanna tailwind, which could drive us towards that quarter level of 75 and then ultimately towards 6,900. The key takeaway here is via our intraday call versus put speculation, we're going to have to see those vol M slopes that we post every day, both of those in a positive direction, at least the call slope in a significant positive direction, indicating out of the money call speculation is coming into the overall structure. Moving on, the SPXP 0 DTE, again, call dominated for the day. We already talked about that. Those will be supportive. We just went over that net stack command. The net stack command is basically a different visual representation of our web app. So same structure there. GEX and DEX transition is confluent, 67.95 to 68.15. We're flirting with the 68, let me check this. Flirting with 68.15 pre-market, so we're right at the top of transition. As we always preach here, transition is very important to stay above. That puts you in a more call-dominated positive gamma structure. Be more supportive and provide a tailwind for a move up towards 68.50. If you are within the overall transition area, it can be extremely choppy. And then if we start dropping below transition, we lean a little bit more cautionary, even though we're in the money call dominated structure. We could see some more weakness down towards that 67.75. It's the bottom of DS. We get below 67.75, we could see a move down towards 67.50, which is our expected move today, 51 points. And we were where we tested yesterday. Nice confluence and look for a bounce. And you see the charm being supportive as we move down. And then the charm headwind up here, as I just discussed, at 68.50. So it will be difficult to overcome those unless we see out of the money call speculation. So that's the thesis for today, above 68.15. As long as we have out of the money speculation, market trend model improving, we'd look for a move towards 68.50. Within transition, choppy, below transition, look for a move back down towards 67.75. Again, this would have to also be met with a weakening vol M as well as a market trend model. But you also see we are supportive as we pull back. So we're not looking for a complete collapse of the overall structure or market. As we move down, this would most likely be a difficult push to the downside unless we see a large change in sentiment and structure, which would be that out of the money put speculation and the in money calls continue to give up monetize or close. Obviously, that would be adding more delta to the overall structure and book, and then the dealers would have to sell. So with that, I think we've laid out our thesis for today. I'll move on over here to the SPX, or sorry, the trading view chart. I've not overlaid the drunken sailor range or the transition area, but 6,800 to the downside is going to be extremely important. Confluence here, 6,795, 0 gex in trans, and to the upside, we've already discussed those overhead levels that we'll be watching as we head into the day. So before I get into individual tickers, GameEdge.us presenting the presentation today. I'm Michael from GameEdge.us team. Check us out, newsletter. Put in your email, you'll be delivered beyond the bell. This again is our thesis, how we navigate the SPX option structure and how we use our tools. And then check out our free courses, education, GameEdge Fast Pass. This is our flagship options course, free. Put your email in and you'll be delivered that on the weekend. And then our blog, we have extensive education and we continue to link those to our X posts. So like and subscribe on X and YouTube and you'll be notified when we go live or post any content. And these are all free to access also. All right, let's go ahead and jump into individual tickers. I know we had MU at the beginning. I think Chuck asked that. So if you have time, would you walk through that on the web app? There are large delta and gamma OI spikes at 300 and 220 on the left-hand plane. Okay, so let's go ahead and jump into this. I'll go systematically how we look at each individual equity in our overall web app and how this can provide you a trading plan moving forward. So MU must have earnings today. I think you said that, Chuck. So let's look at this. So structurally, here's how we look at it. First, I like to see what our gamma condition is. Are we call dominated or put dominated? Call dominated. Okay, I already give the edge to the bulls, right? Call dominated just means, as you can see by the net delta, that there is calls below us, in the money calls, and that positive delta should be supportive on pullbacks as long as you're within the overall expiry. The next thing I look at is for transition. Where's our transition area? 237 to 250, 237.50 to 240. We're slightly below transition. Okay, so that's a little bearish. We like to be above transition in a call dominated structure for an opportunity to appreciate to the upside. Next, I look at where is PGEX and where is NGEX. All right, so PGEX is 250. That's the highest sensitivity level. Actually, COI is the highest sensitivity level. I would assume that's off the page though. So it is. So PGEX is our next area. So 250 to the upside is where market participants are speculating for this expiry for the end of the week. And to the downside, 215 in GEX. So any pullback in MU post earnings should be supportive. I know you talked about 220 on the left-hand plane and 300. 300, that's significantly higher there. So I'm not really sure if you're looking at all, then that may be where you're looking at. But I like to look at the expiry that's closest to us, that's post earnings. And then I like to look at the next expiry. So we're going to watch PGEX and we'll watch NGEX and we'll watch transition as I click on to the next expiry. Does the structure move up, which would be indicating speculation to the upside, or does the structure move down? Okay. So we see the structure actually expand on transition. So this is cautionary as market participants are not really entrenched in bullish or bearish. We see PGEX, which is 250, does not advance. And we see NGEX actually come up under price, which is slightly bullish. It just means puts are coming up under price. And then COTMP comes up higher. COTMC stays about the same. So key takeaway is transition is widening. So speculation is uncertain after this expiry into the end of the month, and 250 to the upside is the highest speculation area. I would not anticipate MU to go to above 250, and then 215 to 220 is your downside. That would be an area where I'd look for an opportunity for a bounce or possible stalling to the downside, and we're still call dominated. And then we can go to all. Call dominated, you see the structure stays the same, really doesn't change, and transition stays the same. So the structure is not advancing, it's not dropping, it's really staying stagnant. So market participants are roughly looking for 250 or 215.20 to the downside. Your expected move for all expiries is 34 points. For this expiry, your expected move is 34. Next expiry is 39. So that would be where I'd looking. Hopefully that makes sense. Okay. All right, let's move on to NVO. All right, NVO. All right, call dominated. All expiries turned on. Call dominated. Transition, we're within transition on spot price, so that's choppy action. 50 to the upside, 45 to the downside. This expiry, speculation is 50. You see significant negative net delta overhead as well as charm. I think that's going to be difficult to get above. And then to the downside, we're call dominated, so the 45 level should be supportive, but you're within transition. So I would anticipate choppiness, price action. Structure really doesn't advance much. 50 stays the same. Transition widens. 46.50 would most likely be supportive. So NVO doesn't look like it's really going to go anywhere fast. So hopefully that helps on NVO. Oracle, put dominated, looks fairly weak. The spot price is within transition, bottom of transition. But look at this red negative net delta, right? It's going to be very difficult for Oracle to move to the upside. Significant overhead charm in the money puts here. Oracle looks fairly weak to me. Put dominated, charm overhead, going to be difficult to overcome, and just entrenched in the money puts overhead. After this expiry, we do see a little bit of release there of in the money puts through the expiry into the OPEX, and then you change to call dominated for a single expiry, and then you change back to put dominated. So just the structure is overall weak in Oracle. So hopefully that helps on that one, JS. Hood, let's look at Hood. Call dominated. All expiries turned on. You're within the overall transition. Speculation to the upside 130. In the money calls below you at 120 and 115. Structure looks good for supportive type action. Speculation to the upside at 130. The structure stays the same at 130. Transition widens a little bit, so a little bit more cautionary there. For me, you'd have to get above the transition at 124 for an opportunity to move up to 130, but you see this charm here too. That 125 area is going to be the area to overcome, and then 127 overhead. After that expiry, call dominated, but you see significant structure overhead that's going to be difficult to get up to. You actually see the double strike there at 130. So that would be a cap on price. So over 124, I would look for 130 to the upside. Iron, let's look at Iron. Absolutely, Butch. Happy to help. Call dominated, all expiries turned on. You're within transition, or you're below transition, so that is weak. Significant overhead charm as well as calls, and you actually see some puts right around spot price. So those are most likely opportunistic for people looking for a pullback. Structure put dominated for this expiry, very weak on Iron. Next expiry, extensively weak. Put dominated, doesn't look like Iron is going to be able to move up, and most likely weak. All right, hopefully that helps. K was Q. QQQ. Oh yeah, sorry. Q, let's check that one. Sorry about that. There we go. QQQ. Qs are call dominated, all expiry. I want to look at, let's look at for the rest of the week, okay? Into monthly OPEX. Call dominated, should be supportive or above transition. So any pullback should be supportive, but just not a significant amount of out of the money speculation to the upside. This is what we're seeing across the board. IWM, Qs, and SPY. You have entrenched in the money calls below us. They're happy holding, but you do not see a lot of out of the money call speculation. Also look at the charm here. It's going to be difficult to overcome. This is a headwind. So to move up, you're going to have a large amount of out of the money calls come into the overall complex. As you can see here, it just barely dries up fairly rapidly. The out of the money call speculation there right above spot price. PGEX historically an area where we see some profit taking, and I already discussed that actually pre-market as I posted on X. 615. Look at that profit taking into 615, right? Boom, and then pull back, boom, pull back. So 615 is that overhead level that you're going to have to get over without the money call speculation. Does that make sense? That's why we use these scripts also on TradingView. These provide great opportunities for overall trades from P-Trans to PGEX, and then you look to take profit in these overhead levels. And the occurrences of closing above PGEX is actually fairly low unless the structure advances. That's why we have our P-Trans to PGEX mechanical portfolio, and we look to take profit on a close above PGEX. All right, moving on to MSTR. MSTR, I think it was show call dominated. Let's look at this. Call dominated, but significant overhead in the money puts as well as charm. You're within transition. That's going to be extremely choppy. Structure looks fairly weak though, even though we are call dominated. I would assume this in the money calls below us is what is driving the overall complex, but you can see the red net delta. So that is just not conducive of a move up. After this expiry, it does change to call dominated 175 overhead. So that'd be the cap on price. You're within transition. So that'd be where I'd look for a move up after this expiry, 175. All right. Ramaswamy, thank you. What is the script name in TradingView? Also, does that need a subscription? Yes, it's within our Discord. We post these for members, intervals throughout the day. We have a full expiry as well as a 0DT transcript, and they're available to our members in our Discord. You download, copy and paste the code, and those, again, are available to our members and update throughout the day. But this is our pre-market run. As you can see, what's really nice is you can already get these levels pre-markets, the option structure overlaid on the TradingView chart, and you can already be planning your trades for the day, which yesterday was very helpful. As a pre-market, we were interacting with key gamma delta levels, and then we faded off those key levels in the morning pretty significantly. So, all right, thanks everybody. This was a long one this morning. I hope it helped everybody. Again, join us at gameedge.us. Be happy to have everybody in there. I'm new to TV. Do you have a video on the script? Yes. Check on X, Mosey Ajani. We posted our market trend model, and then go to gameedge.us blog. And then we have articles about our GameEdge FastPass has articles here. Free courses. GameEdge FastPass has all of our articles about how to do our TradingView scripts. And then the scripts are in our Discord though. So you have to come join our Discord to get the scripts. So, all right. Thank you very much. Thanks everybody for joining us. Like and subscribe on X and YouTube. You'll be notified when we go live with content. As always, manage risk today and make it a great trading day. See ya.